Hello, everybody, and welcome into Commodity Culture, where our goal is to make you a better investor in the commodity sector. My name is Jesse Day. Before we dive in, standard disclaimer, nothing here is investment advice. Do your own due diligence. And today's guest is the CEO of Formation Metals, a North American mineral acquisition and exploration company focused on the development of quality properties that are drill ready. It's Deepak Varshney. Great to have you on the show.
Hey, man, thanks for having me. Excited to be here.
Yes, I'm excited as well. I want to hone in on the gold space for the beginning of our conversation because that's the main metal that Formation Metals is involved with. And then, of course, I want to dive deeper into the company as well. But let's start with gold. What a story it's been this year, soaring to all-time highs of around 4,300 before a correction. But now here we are climbing up again at around $4,100 an ounce as of the time of this recording. Fundamentals looking extraordinarily strong. What are you watching when it comes to catalysts for the gold market that you think more investors should be paying attention to?
Yeah, I mean, look, I think the biggest catalyst we had was the election of President Trump, right? I think end of the day, we have somebody who is very focused on a weaker US dollar, and his policies have led that, have led to that. And ultimately, that's great for gold, right? A weaker US dollar is great for gold. I think, unfortunately, we have a world which seems to think you can print money at will. So you see increasing debt everywhere, and the solutions seem to be just print more debt, right? If you look just the Canadian federal budget that was just tabled recently, these are the catalysts, right? Because ultimately we're seeing is fiat losing credibility. People are flocking to gold as it's been a stable asset for thousands of years, and so these are the catalysts which I think we've seen over the last year, but we're going to continue to see as we move forward, right? And I think another big one is when we see the Fed in the U.S. See leadership change with Powell, his term coming up, and President Trump will finally have the ability to appoint people that support his agenda, which ultimately is good for gold. So I think that's it, right? We have a world that was more and more debt, and we have a president who wants a weaker U.S. dollar. So.
And the rise of gold, what is it telling us about the global economy? Obviously, you touched on it a bit there, but is this a matter of gold reestablishing its role as money in a world where fiat currency is creating the illusion of wealth? Gold, obviously real wealth for thousands of years. Are we entering that kind of paradigm shift in your view?
Yeah, I mean, look, it's tough, right? Because I think everybody, with inflation, what you see, it feels like we have less money year after year after year. It's been an ongoing theme for the last decade. Like every year, it feels like we're poor as a society, and I think that ultimately, you see this with the BRICS countries, right? Poland, of all countries, has been the biggest purchaser of gold, I think, this year. And why? It's because, look, everyone's trying to get away from the US dollar, right? I think that's a big part of it too, right? These sanctions with Russia and them freezing their US dollars means that you need to be able to work outside of the US system, right? If you're, obviously part of the, not part of the Western world, and gold is something that is stable. Though it is absurd. You think about gold started the year at 2,600. It's nuts, right? I mean, I'm a gold bug. We've been talking about gold for years. That's why we have Formation. We felt for years this is going to be coming. And I think ultimately, with the lack of confidence in our just our financial systems worldwide, gold is going to take a bigger and bigger place. I just don't see how that doesn't happen, right? What could be, you talk about catalyst, first question. It's like, what would be a catalyst to make it go back the way things were? Like, I can't see something changing our economic systems back to 2024.
Yeah, that's a good point. And with the unfettered currency creation going on, record levels of debt and deficits, and the West just headed in the wrong direction in a lot of ways. I think you're spot on there. Do you think we're going to see gold re-enter the monetary system at some point? Because there's been a lot of speculation out there. We heard talk of auditing Fort Knox. I don't think that's going to happen. We heard about gold revaluation. Yeah, I don't think we're going to get there. We heard about gold being revalued potentially on the Fed's balance sheet, currently sitting at $42.22. So they could mark it to market. They could even some have speculated they could even value it higher. We've heard talk of gold-backed bonds. That's kind of on the US side. And then, of course, as you mentioned, the BRICS countries, they've been talking about expanding their use of gold for trade between member nations. What are your thoughts on the potential of gold re-entering the monetary system in any of these ways, or any other ways you can think of?
Yeah, I mean, look, it's interesting, and the Fort Knox is a great example, right? I think there's a couple of problems. Number one is the gold really there, right? So we know people have been buying gold recently. Like, I bring up Poland or China or India, whatever. But like the Fort Knox example is great because they're talking about auditing something that's been audited since what, the 1970s. It was like 1973 or something like that, and obviously, there's a huge benefit to having your gold reserves marked to market, right? It immediately erases a lot of the world's debt, right? And all of a sudden, you snap your fingers and whoa, the debt's gone, and it's great. But is the gold there? And I think that's a challenge you might see across the world for a lot of countries, right? Like forget the U.S. I mean, some of these, these developing countries, like, would you trust what they say that they have? Like you would need to bring in people to actually come in and say, okay, you know what, verify, right? And who gets to verify is another issue, right? I think the other challenge is obviously going to be people like printing money. It's the solution that everyone keeps throwing at this problem. It never seems to, no one, it's crazy. Everyone talks about balancing budgets or cutting deficits. And yet I feel like every single, whether it's Canada, the US, France, Germany, you name it, everyone's, it's all deficit spending. If you go back to the gold standard, which means you must have the gold, like it would never work. They can never print as much money as they want to solve their problems. And this is a solution that, when you see anyone in the developing world, work towards, I think there's a role for sure. Because as I said, it's, with de-dollarization happening, you're going to want to find a way to work around the US dollar, and gold is a great way to do it, right? Nobody wants to denominate deals in rubles or yuan or, whatever currency, because again, like the Chinese manipulate their currencies, the Russians manipulate their currencies, all these countries manipulate their currencies, but you know what they can't manipulate? Gold, right? It's an actual asset, right? And when you look at, it's an actual asset, for them to use and settle against, right? And so that's a safe way for these countries to work around the US dollar. But until we decide we don't want to print any more money, how are we gonna ever get away from this fiat system?
Yeah, great summary. And I want to turn to the gold mining sector as well, because it has been also outperforming greatly so far this year, obviously correcting along with gold. So a bit of a pullback here, but much like with gold itself, the fundamentals for the miners seem stronger than ever. What are your overall thoughts on the mining sector here?
Yeah, I mean, look, it is the place to be now, right? I mean, look, it's nice to be able to speak. I'm a geologist, right? And for years in living in Canada, we've had a lot of people who are, they don't, not in your backyard, right? Everyone's okay with mining taking place somewhere else. Nobody wants to, and we've got the world's biggest supplier of natural resources, right? Whether it's gold, copper, nickel, oil, lumber, whatever, what have you. And yet nobody ever wants to talk about these things because they're dirty. They're, they're not helping, with climate change and whatever. And now all of a sudden, with gold going the way it is and commodities lifting accordingly, everyone's excited about gold and other commodities. And yet I think what's interesting is you haven't really seen that appreciation in the share prices for producers, developers, juniors, that you would expect with such a large swing in gold prices, right? I mean, everyone's producing gold at the highest margin ever, right? And yes, of course, you have an increase in their cost of production. Their ASIC is going up. At the end of the day, you have record cash flow. And when you do a comparison between where you would look at them trading, over the last 30 years to today, you find there are actually a lot of these bigger gold companies are undervalued. And really, developers and juniors are even further along down that scale. And so that's where the opportunity lies, right? Like ultimately, how do you make money in the stock market? If you look for something that's undervalued, underappreciated, that you think, you believe is going to increase in value over time, right? You're not buying something for what it's worth today. You're buying something for what's worth tomorrow. And I think a lot of these miners are completely undervalued to where they will be in next year, 3 years, 5 years, 10 years. And so it's great to be in that situation, because me as an investor, I'm getting to buy a lot of, I think, very exciting opportunities out there.
Yeah, I agree with you. I think this bull run in the gold mining sector and gold itself is just getting started. Well, let's pivot to discussing how Formation Metals fits into the picture. Could you start by giving us an overview of the company?
Yeah, so we are not quite a developer. We're not quite an explorer, because we have an advanced asset that we acquired earlier this year, back when gold was 2,600 and unloved. So we are on our way to what I think is going to be one of the next mines built in Quebec, right? So Formation's flagship asset is the N2 gold project. It was discovered in the 80s and 90s, worked on by some very significant companies, Agnico Eagle. Has anyone heard of Agnico Eagle? But at a time when the gold price was much lower, right? I think a big thing in this current gold environment you're seeing is projects which were, great projects, but ignored because of commodity pricing, are now at the forefront, right? This is an asset that has almost 1 million ounces of gold at 1.5 grams at surface, big open system with lots of strike to go develop the asset and grow it. We think it's going to be 35 million ounces. Do you think a company like Agnico Eagle would have given this up in today's gold environment? Absolutely not. But in 2008, gold was $800 an ounce. Right? In the 90s, gold was $200, $400 an ounce. It's a different environment. Now at $4,000 gold, and I think we all feel that gold is going to continue rising unless something changes. To me, this is a project that's already would already be a mine, right? If we were to go back in time and use today's pricing to when they were working on it in 2008. And so that was the opportunity, right? I talk about how you want to look for undervalued companies where you think they're going to be increasing in value over the next year, 2 years, 5 years. Look, we acquired an asset that was unloved, right? Because rightfully so, I understand the company that had it was focused on, Wallbridge had $1 billion market cap a few years ago, and their focus has been on Martinair and Fenelon. For them, it was, this is our flagship asset. This is something that they worked on. But again, after the Great Recession in 2008, when they got it back from Agnico, for them, it was, let's develop this, because the idea was we need to focus on the high grade, because gold prices are very low. This isn't going to be able to be viable with, gold at $1,000, $1,200, $1,500, right? But for us, we saw the opportunity to take an asset. I always use this term. I call it, boring sexy, right? Because everybody wants sexy. Everybody wants that sizzle. People want 100 grams over a meter. 500 grams over a half a meter. But finding a narrow, skinny, sexy vein 300 meters underground is difficult, right? You think about, this project has had 55,000 meters drilled on historically, right? So this isn't as if, we've picked up a project from some small junior that had, some Mickey Mouse company. This is, these are, the pedigree of these companies is huge. Agnico, Cypress, Balmoral, Wallbridge. And 55,000 meters led them to produce just under 900,000 ounces of what I think is very mineable gold, and that's ultimately our goal here. You look at a company like Newfound Gold, which has drilled 750,000 meters, and their resource is barely bigger than ours. Why? Because it's very difficult to look for a narrow, skinny, half-meter vein underground, right? What I like is boring sexy. I like these projects where there's gold everywhere, right? And that's what we have here, right? So we saw an opportunity for a project with a depressed gold price, where we saw, they hit gold in between 70, 80% of the holes drilled in each zone. You think about that, right? Our flagship, our best zone, the A zone, which is where over 500,000 ounces exists, 84% of the holes came back with gold. That is awesome, because that's what you want in a project, right? Do you want to build a mine, or do you want to have a 2-week run where you announce something and then you can never find it again, right? We want to build a mine. We saw this as a mine. We saw this, there's gold everywhere. It's in a great jurisdiction. It's in Quebec, right? We've had over 200 million ounces produced out of the Abitibi Greenstone Belt historically. We're next to actually a past producing mine, which fell a victim in 2019 to gold price. What else, right? Mining gold is hard. Gold at $2,000, it doesn't work. But that's right next to us, right? It tells you for a number of advantages. Number one, we're going to have First Nation support because there was an operating mine in the area as we develop this asset. There's going to be great, issues with infrastructure, right? We're 20 kilometers from the town of Matagami. There's an actual path forward here for this to become a mine one day. Whereas there's so many stranded assets that, great projects, middle of nowhere, what are you going to do with them? Right. I mean, who knows? They gold at $10,000 an ounce, those will become mines too. Right. So I mean, that's it. I mean, I know I've talked a lot about this. This is a project that I'm very passionate about. Right. Because I firmly believe this will be a mine one day.
Well, talk to us about the team behind Formation Metals and how you plan to leverage their expertise. And let's start with yourself and your own background and how you came to become CEO of the company.
Yeah, so I'm a geologist. I always joke I'm a bad geologist because I spend a lot more time actually in the office as an entrepreneur. But that's really been what I think has driven to our success. We've raised just under $17 million this year, and we started the company at a time when gold prices were unfavorable. The market was not as hot as it is today, but people were attracted to our story and they wanted to support us and continue to support us. And we just closed almost a $10 million financing last month, and it's because I'm a geologist, but I'm a business geologist, right? I come from a family that's been part of the capital markets in Vancouver since the 1990s, very successful, multiple Mountain Province diamonds, like multiple deals. And it was funny, is how I became a geologist. It was my dad grabbed me one day and said, look, I don't know, he's an engineer, my uncle's an accountant. And he's like, you're going to become a geologist. And I was like, what? And he's like, you're going to become a geologist. You love rocks, blah, 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 blah. And, the rest is history. And here we are. And formation is kind of the culmination of all that I've learned in the field, which is how we picked the project, but also everything I learned from my family, which is how we've raised the money, and had such a successful 2025. So, yeah, what else? So my family, we're the biggest investors in the company, but our entire strategy was to build this around several anchor investors. So including, someone who literally just put in their last financing, 2 million, and so for these guys, we end up owning almost 70% of the company. The goal is to take this to conclusion, right? Whether it's somebody buying us or we advance this further and try to build it ourselves because they saw the value proposition. And that's, again, a huge part of any company, right? End of the day, if your cap table is weak, as a lesson I've had driven home to me over and over and over again by my family, no matter how good your asset is, you're going to fail. Because end of the day, what you want to look for are investors, people who are with you for the long term, who want to support you and your story, and not traders, people who are renting your stock for a week or two. They're trying to find, okay, when is the next press release or whatever is happening. And so that's what we've done. We've built this company with my family and then people around us. Our technical team is out of Abitibi Metals. So my partner is Jonathan Deluce, CEO of Abitibi Metals. Obviously, Abitibi has done phenomenal. It's probably the youngest company maturity-wise to get a bought deal done by BMO earlier this year. And so their project is very close. It's only a couple hours away. And so there's a lot of synergies, having that as part of the team. And so, I mean, that's kind of it, right? Between me, my family, and the people we've got involved, we're the right people, I think, for this project.
Well, let's hone in on the N2 Gold project. You touched on it, obviously, in the company overview, but I'd like to dive a bit deeper. So talk us about the progress you've made so far there, upcoming plans, infrastructure in place, which you also touched on, but would love to hear you expand on that, and any other details that you think are important to discuss.
Well, that's it. So look, there is sizzle here. This is sexy and boring sexy. And this is a project that's got 6 main zones, which we're going to reclassify as 3 main zones ultimately, because we firmly believe that the northernmost zone, which is the A zone, is continuous, over 8 kilometers in strike, right? And so this project, just under 900,000 ounces is at 1.5 grams, right at surface. And it's a very big, open system, right? So we're talking multi-kilometer strike. It's at its peak width, gold is disseminated across almost 1,200 meters of width, right? So this is a huge gold system very shallow. So the bulk of the gold, and it's open at depth, but the bulk of the gold, again, because of the gold price, they were chasing after shallow gold is within the first 200 meters vertical, So this is a project where we firmly believe, because of what we've seen here, 3 to 5 million ounces, 3 to 5 million ounces is our goal, right? And so what we've done here, look, we were fortunate this year where we started out, look, we're not to say we're being modest, but our goal was, look, let's drill 5,000 meters to start. And then we were able to raise money. Actually in the summer we did a charity flow at 50 cents, right? And our most recent financing was at 37 cents. And we just were able to keep growing our plan, right? So we went from 5,000 to 10,000, then 10,000 to 20. Now we have 30,000 fully funded meters, which means we don't need to raise any money to work this project until 2027, right? Which is a wonderful place to be as a company. And I think as an investor too, right? I think people often forget. You got to look at the balance sheet, right? We have almost $14 million in working capital, right? We're in a position of strength in this environment where, yes, there's been a big rally, but a lot of companies still haven't been funded at our level. Like I would challenge people out there to look for a company with an asset like this, with the same cash balance, trading at under a $30 million market cap. I guarantee you, I can't think of one. I'm sure there might be one or two, but we're unicorns from that perspective, right? And so this project, now we got 30,000 meters fully funded. The A zone is our focus. Obviously the RJ East and the Central, but we think they're still part of the A zone. And the goal is really to drill out. And the cool thing about this is that, first of all, the A zone, 84% of holes hit gold. But B, because they're so focused on these high grade zones, they just left gold, actual hits, just ignored them. They just left them stranded, right? They would hit 20 meters of 2 grams per ton, and they would ignore it because the grade wasn't there for them, right? They would hit 10, and this is how mines are built, right? Like for us, the best thing we could do is go out and just consistently drill 20, 30, 40 meters of mineable gold, right? As exciting as it is to go find, a 50 gram, 100 gram, 200 gram hit, I want to just continually put out assays of 20 meters of 1.5 grams to 2 grams, because that means, number one, everything that they found historically is true. B, we're finding more gold, which is what the point of this entire exercise is. And C, that's how we're going to get to this giant open pit mine, which is what we're envisioning at this project one day, and so really that's what it is. It's 30,000 meters with a focus on the A zone and the RJ zone, and really ultimately deliver a updated resource. I'm hoping that our maiden resource will come out in Q2 of next year. So we'll have assays coming out, and starting in December here very shortly. We started drilling in September. But the ultimate goal here is to have a maiden resource in Q2, right? And what would that number be? I mean, look, I'm wanting it to be over 1 million ounces, right? I want it to be, because you're not going to get to 3 million ounces in one shot. Like that's crazy, right? Like that's not how these things work. You're going to grow these things stepwise. You're going to refine your model stepwise, right? So for us, if we can get to 1.5 million in that first resource, that's great. We've almost doubled the resource, and then we will use that data to now plan the next. And we go to 2, and we go to 2.5. And the nice thing is we have all the money we need to get there.
Great summary. As you noted earlier, 67% of the company is owned by insiders, management, and strategic shareholders, with the Varshney family office holding the majority of those shares. Break down this insider ownership for us. Very high, obviously. People love to see that. What gives you the confidence to have this much skin in the game?
I think what you recognize as you work in this business is that the most money is made when you believe in your own deals, right? I've been regularly buying as an insider. I file it on, you can see on SEDI. Like I buy 28, 30, 35, 40. Why? Because I think the stock is undervalued, right? And ultimately, it's because of what we know, what we've seen historically on this project, where we believe gold is going. Look, here's an easy way to tell people why this company is undervalued. Look, we have a market cap, call it $30 million. I mean, we're at 28, whatever. Share price on a day-to-day basis, obviously it changes, right? We're basically half cash, right? And if you convert our enterprise value for this historical resource, we would be at around $10, $11 an ounce, which is unbelievably cheap, right? Somebody just, they just had a couple M&A deals done where they're valued at $42 an ounce, $50 an ounce, right? That tells you what the value is. The actual value is of mineable gold in the ground. And so you look at our peers, you look at companies like Sitka Gold, which are trading at a significantly higher valuation with double the resource. It tells you that what we have here is very undervalued, and I like making money. And that's why we buy, right? That's why we participate, because end of the day, like I'm not doing this for altruistic reasons. I want to make money, and I know that this is a project where we can see the stock as we put out results, as we create that value. Ultimately I will make money, and so that's why I'm happy to keep buying, because I'm as greedy as everybody else is out there.
Great answer. Well, why don't we end by, I'll open the floor to you. Is there anything we haven't yet covered? Anything you want to emphasize that you think it's important for potential shareholders of Formation Metals to be focused on?
I think everyone should look at a company like Formation because of our cash balance, right? You look at, when I invest in a company, I look at management, I look at assets, I look at cash balance. Those are the three things that are key, right? And I actually look at cash balance first. Why? Because if you don't have the money, you're not gonna be able to get the work done to make me money. Ultimately, there's a lot of projects out there that are stranded because they're in companies with management teams that haven't been able to raise money. Not to my own horn, but ultimately we've been able to raise money because of this asset, right? Yes, I'm a big part of it. Our team is a big part of it, but people see the project, they see N2, they see what it can grow into. And because of that, they're willing to support us on this journey. And so we have a very healthy cash balance, right? Which I think to me is one of the most important metrics. We have incredibly small EV, right? So if you think that a project like N2 is worth multiples of where it's trading at today, the historical resource, as I said, is at $10, $11 an ounce, then you know that at some point value does shine through, and we have the money to make the value shine through, right? And ultimately, I think those are two very key reasons. Number three, management. Right? We've consistently been buying in the market. We're big shareholders. But forget what I think. Like, end of the day, we just closed the financing for 8.6 million, right? That in itself is validation of what we're talking about. It's one thing when people raise $500,000 or $1 million. That's still a lot of money. But to raise that kind of money for a junior at our level shows to you that there are a lot of people who went through, did the DD themselves, and liked what they saw, and I have to say, look, the share price has come down since the financing. Obviously, the last little bit, gold has come off, but all they've done is now started adding to their positions. Why? Because, there are companies when you see the share price come down and you go, shoot, I'm renting the stock. I don't want to get caught. And there's companies where you are wanting to invest in the stock and you see the stock go on sale and you go, this is amazing, right? I have some companies where, and look, I don't want Formation to go to a penny, but if I could buy everything cheap, I would, because end of the day, there's a ton of value here that will shine through. And look, we're almost trading at almost 20 cents cash. So just on the cash basis alone, we're cheap. So I think, end of the day, what I would say to investors is please look at the project, right? Understand our financials, and then call me or email me. Reach out on LinkedIn, Twitter, or X, Instagram, what have you. My number's out there. My email's out there. I talk to everybody. I don't care if you write a check for $500, you write a check for $500,000. I talk to everybody all the time. I love telling this story. Give me a call so I can talk to you and explain to you why this is going to be one of the next mines to go in production in Quebec.
Awesome. Well, I'm going to put a link in the description below to the Formation Metals website as well as social media profiles so people can follow along with the company. Deepak, this has been a fantastic conversation. Thank you so much for coming on.
Thank you, man. Talk soon.
Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.